Good morning, everyone. Hope you guys had a great weekend. Well, we're back, and you can see on that daily chart, market again just been marking time and going sideways. And I suppose, well, for the moment, that's a good thing. Reason being the reversal bar that formed last week over here, that reversal day was never violated on the downside. And that's what's supposed to happen. Doesn't mean it always does happen, but whether it's a market, a futures contract, a stock, an ETF, when it's in an uptrend and you get a bar like that, it's not supposed to break down because it's an uptrend, which is bullish. So that's what's happening. And eventually, and I think it should be this week. I think this is, especially if today goes nowhere, let's hope that we get some kind of movement. How long can it rest? Because this market has been one of which there's been a whole lot of resting because there's been a whole lot of uncertainty. And so while it's been grinding its way higher, there's been these long periods of just chop. So, over here where we had gotten, well, let's back up a little bit just to review. Obviously this was the Corona death strike, which we all survived, most of us. And then it was like, I guess markets participants thought, well, the world's not coming to an end. And the economy, well, it's changing, but, it's not a depression type situation. It wasn't an inverted yield curve type of situation. It wasn't all of the things historically. And so markets, began to move up and chop. And then they moved up here, right? So a couple of weeks ago, we spoke about how market momentum increases. And when it increases, it creates this void. And then over here, we got the internal sell signal, and we got the initial drop. And then markets just started to repair the damage. And a little blip up, a lot of sideways. Little tiny day up, sideways. Little up, pullback. You guys, if you remember this day, sometimes these day-to-day things fade with our memories, but this was a bearish day. Intraday was like a power downtrend, and then a little continuation, held support, back up again, bottoming tail bars, and then the momentum move that we spoke about. And so another resting period. So far, bullish price action. It's right at resistance. Up here, you can see on the weekly chart right to the left, near the all-time highs. Last week was a slowing in momentum weak bar. You can see the candle body being as narrow and small as it is, and the range was narrow. Markets just marked time after the momentum move up. So now that we have this narrow range bar on the weekly, it becomes relatively easy to break a prior bar's low. And I say easy because there isn't far to travel to do that versus, down here where it's a wide range bar, which creates a void. It's got to travel a whole lot more to break that low. So the depth of retracement into one bar into another is part of our analysis. So as you can see here, to review this concept, you had a big green bar, and then it reversed all the way deep into the green bar and broke the low, which prices went down to the next level of support and then turned back up again. Red bar, deep green bar into the red bar, so we read these things bar by bar analysis. That was MT Live last week. If you missed it, too bad. I got the replay if you guys need it. And so, here was that chop, and now, momentum move and chop. So we want to stay out of the chop. And how do we do that? Well, it's easier said than done because at any moment in time, it looks like things are going to take off. But like this looked like it would go down, and it didn't. And deep retracement into the topping tail bar. And now we're at the top of the green bar. So as long as it stays up there, we view that as bullish price action. But at some point, it's got to obviously break out to new all-time highs. And then, how far can it go? Well, of course, that's an unknown because there's no resistance up above. And we'll just see how it all plays out. But this is our line in the sand, our larger line in the sand, I should say, that low and this high up above. And of course, breaking below Friday's low, we got a little downside target, which would be down here. But look, this isn't the greatest chart setup to be doing anything with at the time. So that doesn't mean there aren't others. Just as we look at this one, the point here in this pre-market analysis, one of the points is to educate about how to interpret a chart, whatever it is that we're looking at. And we just apply those same concepts to whatever it is we're looking at. So the Nasdaq, which has been leading the whole way, started getting whippy, and that's when we talked about playing catch up and sector rotation and so on. And where the Russell started to improve and the transports, which we'll get to. But anyway, so here we had the pullback to the rising 20, some minor support, deep retracement, right? Green into red, and it retraced all the way in. That says, hey, it should keep going up. Well, go up to where? Well, here's the resistance area, which it's stalled at. So this becomes a major, it's not major support because it didn't make a new high yet, but the retracement back up there in this sideways price action suggests that it can go through. We'll wait and see if that actually plays out this week. Right? The thing to keep in mind is that this is possibly, it could be possibly an M top, which it had a momentum move. It had a shallow retracement. Right? You've got this bearish new high reversal up there where it cleared these highs and immediately came back in. There's that retracement concept between bars. It's like this one. And so I'll just borrow this line. I'll just duplicate it for now. And so breaking under Friday's low could be the start of an M top. So that's just one of the scenarios to keep in mind today as to, could go chopping sideways and bore us to death all day. For whatever reason, maybe the markets go higher, but breaking under these lows here should send prices down here. And then we see where it ends. And, that brings us to tomorrow. I don't want to get too far ahead of ourselves, of course, but that's where, that idea, we'd see how far it goes. And that would give us some bias as to the direction tomorrow, depending on where this bar ends. So you can see if it breaks below there, there's nothing to stop it from going down. So you want to keep that in mind. The Dow, right? The idea of playing catch up, right? Look how it ran. It bottomed out here, and now it's just same thing, going sideways. Didn't break that bearish reversal bars low, chopping around. Right? This morning, neutral, but it's holding on to its gain. We'll see how it plays out. And, you got the old all-time high up there, further away, more room to travel than the S&P does. So, the Dow, the transports, the Russell should continue to outperform because they have more room to play catch up. Right? So we'll see how it plays out. We'll get to SPX. So the Russell here, I talked about this in the video over the weekend where, this price action here, while it's been weaker than the S&P, it's actually more attractive for a long. And it's got more room to go up, as you can see over here on the weekly. But as far as any kind of weakness, and let's go to the spiders for a moment. You could see how they're hanging up here. So if it breaks these lows, it's going to be much more bearish since it's hanging up there and going sideways versus, you could look at the Russell ETF, versus this kind of, if it breaks Friday's low, it's just part of this bullish flag type of pattern where, you got the momentum move, the downward sloping corrective price action. And if it broke here and became a bottoming tail bar, that would be a great long setup once it traveled above that bottoming tail bar's high. So we'll see. Back to the futures. So far, they're holding up here. There's neutral, chopping back and forth. Notice a little break lower, and it popped back up again. I think that was Friday afternoon. Yeah, it was some wild price action into the close there. Friday. Bonds reversing on support. All right. No surprise. Resistance, support, look to the left, so on. And crude oil just continues to be a market to stay away from. You know, it's just back and forth, back and forth, back and forth, you know, going nowhere. You know, it really looked like it could get going this sideways, and as it popped above the high and formed the topping tail, and that one didn't break below the low either. So the high and low of that topping tail in crude oil here is going to become an important reference point as to which way prices are going to go. So I haven't looked at USO in a while, so let's just take a look, because the oil stocks kind of look the same. But the oil stocks, or ETFs anyway, had a decent day on Friday. So maybe they're going to play some catch up. Keep an eye on that. And gold, you all know, had that nasty drop. And now I don't know whether it's the news of Buffett buying American Barrick. Maybe that's supporting that a little bit. We'll see. But starting to repair the damage after that nasty break. Silver had the same kind of nasty break, but recovering already. So, you know, when you get this giant momentum move and range expansion, historically, whatever it is you're looking at has to go through a period of contraction where the uncertainty created by this bar came down to support, just came down like, you know, falling off the roof, and it stabilized there. So we know that there are buyers lurking below. Now it's come up, so it just got to tighten up a bit. So, all right. So SPX got this tight range, which I'm going to say, right below that bar's low, let's call it safe. Safe. You know, it's not that far away. Let me see what Jake has in here. Condo. Trading McGuire 33.45. That's pretty tight. That's a little tight for me. Yeah, Larry, we'll take a look at the internals. You know, it's just too close for me, McGraw. I know, you know, maybe not for you, but if today started to get a little ugly, look at the hourly chart here. All right, so 33.45. If this started to get weak, there's nothing to stop it. You could tag 33.45 and keep going. So we always, as you know, look for levels where there's some significant support into that area. So 33.20 looks a lot more attractive, but that doesn't mean there's premium there. But if we get some weakness in the morning where it dips down here, those premiums would grow. 33.20 for Wednesday. Well, what if things got ugly today and it's down there today? You know, so we're going into today with a thought of things are bullish, but that doesn't mean they're going to stay that way. And the range is relatively tight, which, you know, makes it more difficult. So 34.10, Jake is saying 34.10, 34.20. It could be, but again, tight range. We don't know which way this is going to go. And so we got strength here. 30. If this breaks out, your 34.10 is going to be pain. And then the downside is going to be something that we're going to want to look at. So it's not so easy to define levels here. And, down here at 33.20, I don't know, I haven't looked yet, but there's maybe no premium, but if it starts to dip, that could change. So it's not an easy morning with this relatively tight range to pick levels that I would say are safe. We'll see how it plays out. Lastly, the transports held up really well on Friday, but obviously a little extended. So it would be normal for prices to chop around a bit more here at the beginning of the week. And as long as they don't drop in a big way, it's bullish. Now, our internals, sentiment is still up there, extremely bearish. And we did get the sell signal up here. And it was just a mild breath peekaboo above 100. Ideally, it would have been a little more, but it's pulled back closer to the zero line, which in an uptrend like this, a lot of times is where we get a little attempt to go higher again. So there you go. All yours, Dan. You just got the book in 1964. Well, it's a tremendous amount of information in those pages. And I wouldn't say it's a read, something that you probably have to go through 2 or 3 times, but tremendous amount of information in that book. You'll enjoy it.
All right. Good morning, everyone. All our opens are fine. If you have any questions, ask me. Apple here in the Dow. Yeah, the market's holding up very well. Apple just goes up, 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 up. That's just amazing. NVIDIA has earnings in 2 days. That's gapping up here huge. Another, maybe it'll keep running into earnings. Greg, I remember trading this one time, earnings 2 years ago or whatever. It got down to like $1.25. Look at that. 350 points, 300 and whatever points higher.
Really? You had $1.25?
125.
125.
And then, no, I just remember this. And then it gapped up on earnings to about $1.70 and never filled the gap. All right. Someone's asking about Tesla on YouTube. I mean, it's this last Wednesday, bullish gap, bullish wide range that closed above resistance. We were hoping for a 1, 2, 3, but I said it looked higher. I gave targets 1650 to 1700. Now it's gapping up to resistance. Friday's pre-market and going sideways. If the market wants to party, then this looks like this at 10 a.m. reversal. If it holds this bullish gap and goes sideways, I would never swing it being up this far, but for a day trade, 30-minute high, sure. I told you all, and that was my first sentence or whatever in the ETF trader. Another week going by that, at least I'll say for me and many people I talk to on the street and in our trading room, the perceived disconnect of economic reality in the stock market is a head scratcher. But we trade accordingly, and we have 98% longs or whatever the number is. We entered a couple bear call credit spreads, but we have 0 directional shorts, 100% long. It's crazy. And some technician woman talked fairly intelligent on one of the news things this morning. She says, well, if we break out, then she actually used our term, a measured move, and she said, oh, I think the S&P is going to 3,700, and it could. Greg talked about that in the letter. If this is setting up a measured move with this red bar being ignored, you take the distance from here to here, project it. But I help my dad and sister manage accounts. I don't know. I'm not long-term bullish for them, but that's a different story. All right, GDX, I'm gapping up over these 4 bars, so that's a little bull island reversal. That would be a nice put spread. Sam, if you put your drop down to all panelists and attendees, Sam is saying advisory letter is loaded July for open trades. Is loaded July for open. I'm not sure what that means, Sam, but we've been trading, you know, the charts. This you know, got these bottoming tails, and we went very bullish right there. We're still long IWM in our ETF trader. We got like 9 open positions in our ETF trader, all longs. All right, let's continue here. All right, this is an IPO, obviously, from Friday. We'll just watch it. I like, on some of these IPOs in the last 6-8 months, we've been getting wonderful 1, 2, 3 setups after they retrace back to their IPO price after a couple weeks. PRNB gapping up to 99. I think this is a biotech stock. It's, I don't know, no great pattern, and it's a bio. You're going. JD, foreign Chinese stock. Let's see, gapping up to 65 on earnings, gapping right to resistance, nothing to do with it, so it's in a big trading range right now. YouTube's asking about, how does Amazon look? Amazon is an ascending triangle, but there's no price void really for a swing trade. This set up a nice higher low retest right there. It's consolidating here. I mean, it's a wide range, so if it sets up as a day trade, that'd be fine. But as long as it holds this higher low right here, it's bullish consolidation. Look at NVIDIA here, where we gave this as a long right there, right on that day. We have a breakdown failure, bullish consolidation at resistance. And I remember telling somebody in the green trading room who was wanting to buy AMD. I think they wanted to buy AMD right up here as a 1, 2, 3. And I'm like, no way. We like 1, 2, 3s out of consolidation, not 1, 2, 3s far from this. And I said, look, I said, buy NVIDIA. NVIDIA has a setup right here. AMD, the party left the station. GDX, someone's asking on YouTube. It's not ideal. It's ideal for a put spread under last week's low, but it's gapping right here to 42 bucks. Just visualize it. It's gapping right to resistance. Could it, you know, be a day trade over 30-minute high? Sure, but I think we can find a lot better. JP Morgan, Augusta, if you can change your drop down. Now, it just cracks me up, you know. So Buffett comes out. It's just a marvelous example of traders. Most of them are sheep. They're just following, you know, stupid things. And so they're programmed, and I don't know who programmed this in their little heads. Oh, whatever Buffett does, then you got to do it. Well, do you understand the timing on when Buffett does something? Buffett does not call you up or send out a press release and says, hey, I think I'm going to start accumulating this railroad, does he? When does he send out a press release? When it's done, you idiots. when it's done. So has one iota of fundamental changed after he's telling you that he's done?
Hey, Dan, there was an article on the weekend that said Buffett was selling his financials and buying the gold, and Soros was buying the financials.
Oh, really? Okay. Well, yeah. Okay. I didn't see the part about Soros, but yeah, I'm bashing not Soros. I'm not bashing Buffett. I'm bashing the idiot public who just they're programmed to do stupid things. So I don't know if that's the weakness of these banks. He says he cut J.P. Morgan, um, WFC. He said he sold Wells Fargo. Now look, as a technician, if I were his technician, I surely wouldn't be selling Wells Fargo right now on all this support. And he did the same thing with Jets. You know, I think he sold Jets way down here. Alex, remember we were talking about, was that a buy signal? And I said, I don't know. It still looks bad, but it turned out that on this gap up, yeah, that was a downside shakeout. And so now he's buying GOLD. And so that thing's gapping up to 29.63. Who in their right mind? Think about that. Who in your right mind would pay 29.63 right now for this chart if you trade technicals the way we do? You're out of your mind. So anyway, enough on him. Let's see, LODE, big old gap. The gap's too big for me. I would have loved it if it were gapping up to like a buck here over this. Because look at the monthly. Well, the monthly is it's you got to blow it up. But the monthly looks like it could go to $3. Yeah. So again, the gap's too big for me, but monthly has room if you feel like watching it for a week or two. PDD had a little bearish bar breakdown on Friday, gapping up to $90. And it could, if it gets over Thursday's high, which it's threatening it right now, 31.13. That could definitely, McGraw, be a put spread under Friday's low. Let's keep an eye on that. MBOT had a beautiful wide range igniting bar on Thursday. Now it's a big gap up. Weekly, monthly also have room. NVAX, biotech, you're going to, these bios, you're going to get news up and down all the time. Khaled, VIAC. Yeah, you got a topping tail on Friday, so I'd rather it go sideways for a bit. You actually got a sell setup of the monthly, but watch it in the afternoon. It's not a tier 1 for me for the morning. Halliburton needs to go sideways more. My eye always jumps out at a pattern that I love. And right here is what my eye caught right there. Breakdown failure, bullish engulfing, new low, plus, gap up. That was your entry on that little gap up bar. Yeah, Dollar Tree, we have, nice gap breakout. Yeah, Dollar Tree looks great. I just don't trade in the first 5 minutes, but let's put that in a window right here. Dan, Marcus, your drop down, please. Dan, let's not rush into things. Market gapping up, selling off here a little bit pre-market, and it's also Monday.